Okay, folks, as we take a look at this week, it's certainly more interesting than last week with some pretty significant data out for the UK and the US. So, without further ado, let's get stuck in. First of all, we've seen Japanese producer price index data coming in lower than expected, just taken some of the pressure off the Bank of Japan, and that's resulted in the yen hitting a 2023 year low. Now, the lower the yen goes, the more chance of MOF intervention. That's the Japan's Ministry of Finance. So just watch out for the yen this week is the first thing to say. If we get significant weakness, seen a bit of a reversal in some of the risk reversals, which were pushing higher, now pushing lower in some of the yen crosses. So definitely watch out for a yen intervention this week. And the market started on a yen selling footing. So be aware of that. That's going to be residually going throughout the whole week. Today, we haven't got very much on the data front. We've got Fed's Cook and BOE's Mann speaking. Catherine Mann is a very hawkish member of the Bank of England. And remember, the Bank of England's basic outlook at the moment is that policy needs to be restrictive for extended periods and there's upside risks. Catherine Mann is just going to underscore that. So, very unlikely to provide any tradable opportunity from Mann. The first interesting opportunity in terms of scheduled economic data points comes from the UK employment and earnings data. Now, we know what the baseline is for the UK. They see inflationary risks, they see policy needing to be higher for an extended period of time. So, the best opportunity is going to come from a big miss in the data. Because a big miss in the data is going to push back against some of those more hawkish expectations. So if we see average earnings coming in, below 7.6, including bonus below 7.2, unemployment rate, if we see that coming in higher, 4.4, claimant count change, if we see that significantly moving the needle, and employment change, if we see that significantly moving the needle, then we could look for a potential pound selling opportunity. So if we see red across the board with a couple of below minimum expectations for the average earnings unemployment rate. And if we see a more dovish set of prints, you can expect some of the recent pound strength just to unwind. We've seen the pound taking a little bit of a rally from an index level. Just taking a look here, the pound and index level. See, although we have a weak bearish outlook for the pound, see on the index level, it has just taken a little bit of a pullback, and we could expect that pullback to weaken if we see a miss here. So pound selling would be a good opportunity, and have to pair it against a strong currency at the time. Another opportunity would also be if the data comes in very strong. So if average earnings is very good, 7.8 plus, earnings including bonus 8.1%, unemployment rate if that comes in below 4.2, looking at the UK data, you can see that these average earnings, the Bank of England is seeing these high average earnings as an outlier for now. So they're sort of looking through this. You can see that is actually above the inflation level in the UK, and unemployment rate continues to track higher. But if that sort of starts moving lower again, that will be a concern for the Bank of England, that conditions are much more positive than they've been thinking, e.g., they will need to hike rates more aggressively. And on top of that, the risk reversals in the FX space are notable for the euro pound. And what we're going to see is look at this here. You see that prices moving higher even as risk reversals are moving lower. So if we do get that's price there, risk reversals tracking lower, you'd expect one to catch up with the other. So this could mean if we see some very positive news for the UK, it means interest rate expectations will have to rise even higher, and you expect price to start moving in line with those risk reversals. So just looking at the euro pound pair on a very strong data print, we're in a big resistance level here up on the daily chart. You can just see price just moved from that 8750. Hefty daily resistance could be a great area to potentially sell from, with risk reversals pushing lower even as price trends higher. So that's one to look for on Tuesday. Best opportunity, I think it's two-way opportunities really for the UK data, and the euro pound. Those risk reversals look very attractive on a very strong print. We then got some Eurozone data. I'm not finding that so interesting this week. We know what the outlook is for the euro. They continue to stress growth, outlook remaining bleak, inflation's coming down, and they expect those falls in inflation to continue. We did have a comment out from ECB central banker this morning, just saying that, yeah, there could be a little uptick in inflation in the near term. De Guindos was saying, expecting a temporary rebound in inflation in the coming months as the base effects from the sharp increase in energy and food prices in autumn 22 drop out. So base effects are sort of, looking at getting some attention here. So I'm not really seeing a great opportunity with Eurozone data. Yes, if the growth came in, really, really very weak, and the preliminary data for the second quarter, for Q3 rather, just came in, much lower than expected. You might see some more downside in the euro, but that's kind of the base case anyway. So I'm not seeing a great lot of opportunities there. Best opportunity for Tuesday, I can see, is the US inflation data. Now, a lot of the market is rates driven at the moment, particularly US rates driven, with expectations of slowing. If there's slowing growth in the US, then that's perceived as slowing interest rate hikes. And the inflation data as well, if that comes in much lower than the market's expecting, takes the pressure off the Fed, lower rates, that would weaken the dollar, send 10-year yields lower, bringing the bid back into bonds and lift the S&P 500. So good opportunity would be inflation rate month on month sub 0%, core sub 0.2, headline 3.3 or lower, core coming in at 4% or lower, 3.9% would be ideal. That should see, if we see that print, should see immediate upside in the S&P 500. We've been having a good run in US equity markets on this narrative that the Fed may have peaked on their rates level. So, you just look at short-term interest rate markets, and they are very happy with the outlook. You can see here, short-term interest rate markets, just, seeing that the Fed has potentially had their last interest rate hike. Interest rate expectations just peaked up a little bit last week. And that was on Powell's comments, but there's a lot of toing and froing with the comments from Fed speakers. So expect that to continue. But the beauty of this week is that the inflation data on Tuesday should be something more concrete about how the Fed is actually doing in their inflation battle. So best opportunity, big miss in the data. Expect that to sink the dollar. Expect euro-US dollar pair to rise. Look for any other strong currencies on the day. 10-year yields lower. You expect S&P 500 higher. Is there a two-way opportunity? Yes, potentially, but don't forget the problem with the dollar right now is it's very stretched in terms of the CFTC report. Now, the CFTC report hasn't come out yet for this week, so this is the previous week's report. But still, you can see how stretched the dollar aggregate and dollar index positions are. So, not really interested in chasing higher US dollar, but you might get a little pop lower in the S&P 500 if this comes in much higher on higher interest rate expectations. So that's worth looking. And depending on your time scale, how intraday you are, then you'd have to make that choice yourself. But obviously, higher inflation, higher rates, that should be negative for stocks. Then we've got a whole series of Fed speakers. Don't forget they can move the needle. Barr is neutral. Mester is hawkish. Not sure on Goolsby, but what we're looking for here is we're looking for Hawke saying something dovish. So if we get Mester standing a little bit more cautious, then that should lift the S&P 500. Aussie wage data on Wednesday. Don't forget central banks view wage data through an inflationary or a deflationary lens. Strong wages is inflationary. We had this morning the deputy governor of the Bank of Australia stressing that inflation risks may be more pronounced. It was acting assistant governor Kohler said decline in inflation is to be more gradual than previously thought, and bringing inflation back to target is likely to be more drawn out. So high wage data, expect that to lift the Australian dollar. And we do have a macro trade idea out for Euro Australian dollar shorts at the moment. That's worth looking at. So big beat in the data here. That's inflationary. Euro Aussie dollar downside makes sense with the weak bearish outlook for the ECB. And just looking at the risk reversals and the Euro Aussie dollar as well, see that that's pretty attractive. See, risk reversals pushing lower, even as Euro Australian dollars pushing higher. So really like getting into Euro Aussie dollar shorts with a bit more gusto if we see strong Australian data this week. And you can see we've got this potential false break of this daily trend line. Also, looking on the monthly chart, we've got a potential false break of this sort of compressing price action. In other words, selling from here is a low risk, high reward entry. Okay, and if this closes below here, then you'd expect price to potentially move back into that big range. And if the central bank outlook does diverge between the ECB and the RBA, i.e., more pronounced inflation risks for the RBA, as the deputy governor is foreseeing, then you expect this euro Aussie dollar pair to roll over. Okay, so that's pretty attractive for the Australian data. Got more inflationary data out for the UK. That will be important again. Same outlook. We know what the basic outlook is for the UK. Bank of England's Bailey told us last week. Policy needs to be restrictive for an extended period. There's upside risks. So notice how this is expected to fall significantly. Look, Bailey's been sort of singing about this, and understandably so, for a few weeks now. That 6.7 headline inflation expect to fall to 4.8. Core 6.1 down to 5.8. So the big surprise will be here is if the touted drop in inflation doesn't happen. Okay, if this comes in above market's maximum expectations, definitely expect pound upside. And I would look at euro pound selling would be a pretty good opportunity here on high UK inflation data. Otherwise, a big miss in the data here. If it comes in below market's minimum expectations, we might very well see a bit of repricing on the inflation risks for the UK, and we could see some pound weakness and some of that recent pullback in the pound, accelerating lower, and look for pound weakness on the back of a big inflation data and try to pair it with a strong currency, whichever currency is particularly strong at the time. Markets are quite sort of nip and tuck at the moment, so you have to wait until Wednesday to find something. And if you're looking for something, you can always use a currency strength meter just to help you on the day. US retail sales data prone to be choppy, but does give an insight into how the US economy is doing right now. And as a such, it is likely to have the best opportunity if this is a miss. Big miss below market's expectations. We'd expect some upside in the S&P 500, selling in the dollar, upside in euro, US dollar. Could be some upside in pound, US dollar if the inflation data is very strong. So US retail sales data will be important again this week, as is all US data. Markets are using it as a proxy for the speed of US rates. Strong growth is a greater expectations for US interest rates being hiked. Aussie wage data will be very important. Okay, this will give a good insight in how Australia is handling its inflationary risk. Strong wages, strong growth. If this comes in above expectations, then look for Aussie dollar upside, particularly against the euro. So euro Aussie dollar downside and the beat would be a preferred option. Again, if it's strong data, again, you could also look for Aussie New Zealand dollar upside. That's always a go-to currency pair for the divergence between the RBA and the RBNZ. If it's a big miss in the data, maybe expect a little bit more Australian dollar weakness, but I wouldn't be chasing that. We know how stretched Aussie dollar shorts are on a CFTC positioning point of view, very stretched to the downside. We had the so-called hawkish hike last week. I didn't see that as a reason to chase Australian dollar weakness, and still don't. So, it's higher inflation and higher growth risk for Australian dollar upside, and particularly if we see US interest rates expectations being pushed back, Aussie dollar gains could be significant alongside the optimism about President Biden, President Z. Yeah, you got to put all your ducks have to fall into a row for that. But the greater probability stroke risk is for Australian dollar down upside than downside. So I'll keep your eye on that. Then we got more Fed speakers. We're looking for something that the Feds are sort of saying we've done enough to lift US stocks. Mester also coming in, hawkish again. Williams coming in. Now I think he's more neutral, Williams. And Barr's more neutral. And Waller is a hawkish member of the Federal Reserve. Bank of England, we got the basic outlook for the Bank of England. Bill Bailey sort of come in with a three-line whip about this is the message that we're having: higher rates for longer, upside risks. So look for any, people ducking away from that narrative. Yeah, not much there going on for the rest of the day. It's just Fed speak. So the thing to watch out when you get like this is that when there's not much in terms of data, you've got lots of Fed speakers. You can get sort of choppy two-way action in S&P 500. Then going into the end of the week again, bit of quieter end of the week. Eurozone inflation data, not expecting that to be much significant. It's the final data. And you got some Canadian inflation data out with the PPI. Not necessarily a market mover, but just worth being aware of at the moment. Last statement minutes from the Bank of Canada were saying, bit of a risk of higher interest rates. Some members of the governing council felt the rate would more likely than not need to increase. So higher inflationary data out of the CAD should be marginally CAD strength, but I don't really see a potential trading opportunity. So there we go, folks. That's the major outlook that we've got and the things that we're looking at for this week. So a little bit more exciting than last week, and there could be some good trading opportunities to take advantage of.